Hello and welcome. My name is Steve Johnson. I'm Deputy Managing Director of Cardinus Risk Management's Property and Insurance Division. And today I want to talk to you about buildings under insurance. Cardinus, amongst a range of services, conducts thousands of reinstatement cost assessments on buildings every year. So we see firsthand the issues around underinsurance. Over the next 10 to 15 minutes, I want to talk to you in a bit more detail about the implications of underinsurance, how buildings become underinsured, and look at some frequently asked questions, the answers to which I hope will give you a greater insight into this particular area and help you to ensure that the buildings that you own and manage are insured correctly. So underinsurance, it's not a new phenomenon at all. Industry associations and insurance companies have been talking about underinsurance for years, and there continues to remain concern in the insurance market as to the levels of underinsurance. Claims can be particularly devastating, as you can see from the example here. For this listed building, the claim was so significant and the level of underinsurance was so significant that the reinstatement had to be completed using modern materials. Our first thought in major claims is to ensure that no one has been injured and helping our leaseholders. And then our attention turns perhaps to the buildings and whether they are adequately insured. So let's have a look at the implications of underinsurance. Of course, it sounds very simple to say, but claims payments don't meet the full cost of repair or reinstatement of a building. And in that respect, our own experience over conducting thousands of reinstatement cost assessments is that the average level of underinsurance is around 600,000. I should also say that the most significant level of underinsurance that we've seen on a single building is in excess of £30 million, enough to break a company. But even for smaller claims, there can be extended and complex negotiations within brokers and insurers. You can have discontented leaseholders and tenants, and this will ultimately lead to extended rebuild times. Nobody comes out of this underinsurance claim well, and there can be significant damage to reputation and brand. So how does a building become underinsured in the first place? Perhaps a professional valuation has not been carried out in the last 3 years or even before that, or even at all. Figures might be based on the market value rather than reinstatement costs, and I'll come back to this in a moment. Perhaps historical figures have been rounded up by insurers using national average index linking and may not take into account the rise in material and labour costs in the particular area where your building is situated. And maybe you've relied on developers' figures to actually set the sum insured. And these may not include aspects such as debris removal costs, surveyors' fees, and the cost of meeting local authority requirements in the event of a rebuild or VAT. And again, I'll come back to this in a little bit more detail in a moment. So what are some of the frequently asked questions? If my building is constructed of stone, will this have a bearing? Yes, of course it will. Brick is less expensive than stone. You may have the costs of quarrying stone, the transportation costs in moving stone to an area that might be considerably further away from the site. And also you may have situations whereby the level of craftsmanship required to reinstate a building using stone may be firstly difficult to obtain and certainly more expensive to obtain. Does the area where the property is located have an impact? Yes, well, when we conduct our reinstatement cost assessments, we take account of regional variations and all of our rebuild rates are rebased to the specific area concerned. Of course, you can have a situation where you have two properties in close proximity to each other, one in an upmarket area and one in a less desirable area. The cost of reinstatement will not necessarily vary between the two. And I said I come back to it before, but what's the relationship between reinstatement cost and market value? Well, the simple answer is absolute none. There is no correlation at all between reinstatement costs and market value, as this example shows. What about historic or listed buildings? Well, in the main, the cost of reinstating a historic building or listed building are dramatically more expensive than actually reinstating a building using modern materials. Consider the nature of the listings, whether they're external or in some cases internal as well. Look at the level of craftsmanship that might be required. Look at the nature of the materials that will be required. And remember also that you're going to need to deal with heritage organisations, which can result in extended timescales for reinstatement. So if I set my insurance cover based on the developer's figures, shouldn't that be adequate? Well, our experience in conducting a huge number of valuations on buildings that have come off development is that development costs do not compare well, if at all, with the costs of reinstating a building. So let's look at a few factors that have an impact here. For large developments, it's likely that a fixed cost tender has been put in some cases perhaps a few years before the first plant arrives on site. Then you've got the construction period. Might be a year, might be longer. So you've got to take that into consideration. So immediately you could be 3 or 4 years of increased labour and material costs that are not factored into a developer's figures. Then we look at the development as a planned development. Developers have looked at things over a period of time and worked out the most efficient way of developing a site. In some cases, the debris removal costs originally are fairly small, maybe a few buildings to remove from site. Over a period of time, surroundings change and there could be more densely populated buildings in that particular area, which will result in increased costs on a reinstatement as against the original development. Developers make sure that they enjoy the best economies of scale. So in some cases, buying hundreds of bathrooms or hundreds of kitchens. And in that respect, the cost there is likely to be less than in a reinstatement. And ultimately, when you're reinstating a building, there's a differing profile of professional fees. Let's have a look at an example using a time-lapse recording. In this example, this is a Barratt's development from a few years ago alongside the Thames at Fulham. You'll see initially that the level of debris removal costs for a few small warehousing buildings would have been relatively small. Also note how the developer works across from one side of the development to another, making it the most efficient way of actually working across the site. See where the tower cranes are actually based on top of the building and in some cases in the lift shafts. Ultimately, for a 300 plus unit development, the costs of bathrooms and kitchens would have been significantly discounted, again allowing the developer to work with reduced costs. And as the building nears completion, you'll see all of the access now, or a lot of the access has actually disappeared. Will roads need to be closed in the event of reinstatement? Where will you need to put the tower cranes? Will they need to go on platforms in the middle of the Thames? Let's now look at the thorny subject of VAT. Should VAT be included in a reinstatement cost assessment? Before I come on to this example, I want to look at a few things and factors that have a bearing. Firstly, what's the insurer's position as regards VAT? Do they require their policyholders to include VAT on rebuild costs? Secondly, what's the status of our client? Are they able to recover VAT? And thirdly, what's the occupation of the building? What's the level of VAT that needs to be applied should VAT need to be included? Let's look at this example in a bit more detail, and you'll see sometimes that there are factors outside of even these controls which can have an impact. So a block of 96 flats were valued and insured for the full rebuilding value, but the residents decided not to include VAT in the total, even though they were unable to recover VAT in terms of their VAT status. And this was solely to reduce premium spend. Unfortunately, there was a large fire at the property and the building was substantially damaged. Because of changes in legislation for private dwellings at the time, when planning permission was sought, the local authority only granted permission to rebuild 90 flats if the building was demolished and a new building was to be put in its place. So this left a choice to be made. Rebuild the property as 90 flats and 6 people lose their homes, or to reinstate the property instead of demolishing. There was only one option, and that was to reinstate the property. And because the client had originally opted not to include VAT, this has left a shortfall of more than 20% in terms of the rebuild costs, all to be borne by the residents as a result of their original decision not to include VAT, causing a great amount of distress and financial loss. So how do we ensure our property is adequately insured? Well, a simple answer is to arrange a reinstatement cost assessment conducted by a professional company and on a regular basis. And here, the Royal Institution of Chartered Surveyors recommends a major assessment every 3 years, with possible desktop assessments in the intervening years to ensure that the sum insured always keeps pace with the level of reinstatement. I should add that if the building is ever changed, that's also a time when a new reinstatement cost assessment should be made. In general terms, labour and material costs are increasing. You've also got the impact of Brexit. We don't know what will happen ultimately to labour and material costs, but one thing I will say is that RICS have forward projected over a number of years. And one thing's for certain, whether you look at a pessimistic view or an optimistic view, that costs are increasing. Ultimately, having a professional reinstatement cost assessment completed means that your property will be correctly valued in the event of a loss and will avoid the perils of underinsurance. Should you have any questions, please address them to property@cardinus.com or telephone the number below. Alternatively, you can visit our website at www.cardinus.com and we'd be pleased to help you. Thank you for your time this morning and good luck.